You enter a swing trade based on a standard moving average. The setup looks perfect. Then the price unexpectedly drops, triggers your stop loss, and immediately reverses right back into profit. The problem lies in the math of simple moving averages. They track pure price movement but completely ignore trade volume. To a standard moving average, a tiny retail order carries the exact same mathematical weight as a massive institutional block. Relying on price without weight creates a dangerous vacuum. It leaves retail swing traders highly vulnerable to low-volume market manipulation and false signals. To filter out that retail noise, you need to measure the gravitational weight of the market. That weight is volume. If you want to survive a multi-day hold without getting stopped out prematurely, you have to locate the fair value zones where heavy institutional volume is actually clustered. The solution to finding those zones is the volume-weighted average price, or VWAP. High-volume integration identifies exactly where smart money is stepping in to defend a position. This animated diagram breaks down the foundational VWAP formula. It takes the cumulative total of the price multiplied by volume and divides that by the cumulative total volume. This calculation outputs a stable baseline of volume-weighted value. Notice how it remains resilient even as chaotic price action intersects it. But there is a major limitation for swing traders. The standard algorithm automatically resets at the start of every daily trading session. That daily reset destroys the continuity of the trend, making the standard indicator unreliable for week-long holds. To maintain technical accuracy across several days, swing traders use a modification called anchored VWAP, or AVWAP. Look at this chart. Instead of an automatic daily start, you manually anchor the calculation to a significant market event, like a major swing high or a distinct trend shift. This anchored line now accurately tracks the average price paid by market participants since that specific chronological point. Anchored VWAP provides the necessary continuity to track long-term institutional momentum across multi-day life cycles. The optimal entry signal is called the VWAP pullback. You wait patiently for the price to trend away from the indicator and eventually retrace back to touch it. This chart shows a valid entry. The price makes a decisive crossover of the VWAP line, and if you look below, the move is supported by a measurable spike in trading volume. To validate the setup further, you combine this crossover with a momentum oscillator like the RSI. This confirms the prior trend is exhausted and the reversal has room to run. For defense, place your stop loss 15 to 20 pips beyond the VWAP line, or just past the nearest structural pivot point. Since VWAP acts as an institutional wall of dynamic support, a decisive close on the opposite side signals the defense of that level has failed. You can now exit based on data rather than an emotional reaction to a wick. When we revisit that chaotic retail chart from earlier, applying the anchored VWAP immediately organizes the noise. It reveals a clear, navigable backbone of market support. This strategy achieves its highest strike rate on major, highly liquid currency pairs like USD-JPY or GBP-USD, where institutional activity is heavily concentrated. These precise volume tracking methods were originally pioneered by researchers at leading economic institutions long before they reached retail trading platforms. Using the anchored VWAP aligns your entries with the deliberate footprint of institutional orders. Executing an institutional strategy requires a trading environment that provides precise, volume-weighted data across major currency pairs. The FXNX NX1 platform provides the institutional-grade charting tools and volume transparency required to anchor these swing setups with confidence. Stop guessing at hollow price action. Implement the AVWAP strategy to see where the market is actually weighted. Open an account or start a demo with FXNX today.